A sniper entry is simply an entry that has zero or no drawdown while trading. Now, the fastest and easiest way for you to identify this sniper entry or spot the sniper entry is for you to identify a valid point of interest that has a specific type of liquidity on it. Now, I'm going to explain to you how to spot this specific type of liquidity on the chart. But before going into that, if you're seeing for the first time, my name is Divine, and what I basically do on this channel is document how I trade and as well show you the mindset behind my strategy. If you want to see my content, I want you to like, subscribe, and as well drop a comment. I'll be right back.
Now, before going to the chart, I want you to understand that if price give us a valid mode of interest, there's only two scenarios that can happen. The first scenario is referred to as the sniper entry scenario, or we have the confirmation entry scenario, which is the second scenario. So this is likely going to be the first scenario, and so this is the second scenario. Now, in the first scenario, what you want to see price do is I want to see price give us a change of character, which is this, and they want to see price retrace back into this point of interest. And now, when price is getting this point of interest, if you watch carefully, what price give us a specific type of liquidity called the double top liquidity. And when price swept the liquidity, it swept it inside our point of interest and give us a complete sell. Now, so for this entry now, a possible entry for this particular setup is simply to enter a sell from this position at this level here, and your stop loss resting above this one here, and then you target your take profit to be here. Now, if you look closely at this point, at this particular setup here, you see that we had little or no drawdown at all, and price went directly to our take profit. Why? Because we are able to spot that price gave us a specific kind of liquidity called double top liquidity. Now, in this second scenario where you need a confirmation before you can enter the trade, is referred to as a confirmation entry. Now, if you look closely at this point of interest now, it's a very valid point of interest here. And what price was giving us a trendline liquidity here. Price was giving us a series of trendline liquidity. Price was giving us trendline liquidity at this point here. But we cannot just enter at this point here, even if price come to our point of interest, because price haven't given us any scenario that we're going to start going down. So what was the scenario? When price changed character on this trend, retraced back into this position, and then sold off. So a possible entry on this particular setup now is to short from this level here, put your stop loss above this high here, and target this low here. You see, it's not really a sniper entry because it requires confirmation for you to take the trade. Because even if price gets to a point of interest here, you can't just sell because price has gotten to a point of interest. There's no confirmation yet. But this one, which is referred to as a sniper entry, there's little drawdown. There's no zero drawdown or little drawdown. But here you have to see how price have to trace back into this place and all that before price drop. So this one is referred to as a sniper entry because of this specific liquidity that appeared here. And this one is referred as a confirmation entry because we need confirmation for us to take a trade at this level. I'm going to show you this on the chart, how to identify it on the chart. Let's dive straight into the chart. Now let's look at this trade that I took. How I was able to identify this sniper entry. And why is it a sniper entry? Price had little or no drawdown to this point here, and price blew up to the upside. What made me have this confirmation was because of the position of this liquidity that price built here. Price gave us this double bottom here, and I knew that before price have to buy, even if I'm bearish from the high time frame down to this point, before price have to buy, price need to sweep out this liquidity here before price goes to the upside. And as you can see, price did that here before it moved to the upside. Analyze this chart on my last previous video. I did my two previous videos before now, so you can see we analyze this chart before now. So I knew that price was going to buy exactly if price got the liquidity here, and once price just did to move to the upside, you can see it's not even up to how many pips. 10 pips movement before price went into our take profit. So this is how to identify a sniper entry. I'm going to show you a live chart or show you a live trade here, and possibly we can take it maybe this coming week together. If you lose, we lose together, and if you win, we win together. Now we're going to analyze GBPUSD together and see what's going to be the possible outcome If it's going to be a winning trade, we'll win together, and it's going to be a losing trade, we'll lose together. So if you're seeing me for the first time, we know how we normally analyze trade here is to go to the higher time frame and then analyze it down to the lower time frame where we can get possible entries. So first thing first off is to go to the higher time frame, which is for me daily time frame, and analyze what's going on with the daily time frame down to the lower time frame. And what I want to do on the daily time frame is to simply see how I can be able to understand the direction of the market and as well key levels in the market. Now here on the daily time frame, we want to see what direction is saying. Is market in an uptrend or in a downtrend? Now with our eyes, we can see that price is clearly on an uptrend. But what's the trend saying? Now if you look closer at this previous data here, you will see that at a point here, price was in an uptrend and price broke below this trend here, giving us this support level here as a key level. This is a key level here. And this point that price broke out from as well too is also a key level. So this is a key level as well too. So this is a key level as well too. Now we have been able to identify a resistance key level and as well a support key level. So what's the next thing to do now? We have seen that price is in an uptrend, but price is below the trend, it's giving us a bearish signal. But that's not enough information for us to use to decide if you're going to go bullish or go bearish. Now the next thing first off is go to the 4 hours time frame and understand the market structure and as well identify a supply or a demand zone. Now on the 4 hours time frame here, remember we're paying attention to what price is doing at this support key level here and as well at this resistance key level here. Now if I had to look closely here, we'll see that price was in an uptrend at this level here. So price was giving us a series of higher high and higher lows. Why is it that? Why is that so? A high, a low, a high, a low, a high, a low. So price was giving us a series of higher highs and a higher low. And when price got to this point, price went into a ranging phase. When price got to this point here, price went into a ranging phase. And where is ranging phase? This place is a ranging phase. Why? Because price was just moving between this box in this area here, and price wasn't giving us any series of market structure in this point here. Price was just giving us a series of ranging phase here and consolidation phase. You can call it whatever you want to call it, ranging phase or consolidation phase. So what are we going to look at for now? Now, since price gives us this consolidation phase, what is price doing in this box? Now you can clearly see that price gives us a supply zone here, giving people the impression that we're going to sell. And what you can clearly see here is this is a supply zone that price gives us from at this point here. So we're able to identify a supply zone, even if we're looking out to be very bullish on this trade. We have seen that price gives us a supply zone here, and we are paying attention to what price is going to do at this point. But before that, we're going to go to the 1 hour time frame and refine this supply zone to see what's going to be the possible outcome. Now, refining the supply zone now, it becomes this. And what we're looking for when price comes to this point, it has become a point of interest. We're looking for price to come back to this point and give us a sell. But what can you see? When price came to this point, it gave us a reaction and then filled this zone. So this point that price filled us now has become our new point of interest, and it has become a demand zone that was caused by a filled supply zone, which is referred to as a flip zone. So this point here now is a flip zone, and what you're looking for to do now is for price to come back to this zone. Is for price to come back to this zone and look for a possible buy entry. So this point now is the point we're looking out to buy from if price eventually come to this point, so we can continue this trend that price is making on this point here. The reason I'm looking for buy is because price was in an expansion, it was in a ranging phase, and price have expanded. So we are waiting for price to retrace back into this zone so that price can continue a distributing phase to the upside. So a possible entry on GBPUSD here is to wait for price to retrace back into this point and then distribute to the upside. So we're looking at to buy from this point here. Put our stop losses above this below this place here or this place here. Anywhere I want to put it and target this high here. So this is a possible entry for me on GBPUSD.